Good morning, everyone, and welcome to the On Time, On Target Morning Brief. A lot of folks already in the room this morning. I thought you might be after a day like yesterday, right? Pretty big sell-off, pretty aggressive. Kind of reminded us of Tuesday, where the market did the same thing and then ultimately bounced on Wednesday. But we're going to take a look at that. So what caused all of that? Well, first of all, let's back up. Even despite yesterday's sell-off, February, which this is the last trading day of the month in February's up. You're up in the Dow, you're up in the S&P 500, you're up in the NASDAQ, albeit just barely. I hear you. But remember, we had the big move up already and then down. So really, we're rewinding back to earlier in the month. And that's if the market continues to sell off today, which I don't think it does. But so when you think of these massive losses that I'm hearing about, and my phone was ringing off the hook yesterday, which again, you guys have the right to do. That's why I am here. But to put it all in perspective, I'm hoping folks watch this morning to kind of think, this isn't the mother of all sell-offs in the market. In a way, we've all been a little bit spoiled because the market has simply marched higher for so long that we've kind of forgotten what a thunderstorm rolling through paradise can look like. So today we're going to talk about why did the market sell off. Again, it's because of the interest rates, but you may not fully understand that. I'm going to play a 3-minute clip from Kramer, who explains this specifically better than I could yet. But I've been trying to explain it to folks. He puts it into much better words and put it out last night on TV. So again, that's a 3-minute clip coming up that we'll talk about why this inflation is, the move up in the bond market, which is well bigger than the stock market, is people are thinking inflation's coming. Maybe you think that too. Either way, that's going to be the theme of the day is, why is the bond market moving up? How does that affect equities and where we need to position our money going forward? We're going to take a look at real estate, commodities, Bitcoin, equities like Apple that have sold off hard. Other things like, hey, those bond investments like FIXD that we've been putting money in as a holding pattern, why is it selling off and is it going to continue? Those are all the things we're going to peel off today in today's show. If you're checking us on replay, then consider subscribing and hitting the notification bell so you get these when they're released every day. If you want to join us live, it's $25 in the room. To come on in, you have a question and answer panel as well as a chat panel to be able to ask me questions real time so I can give you the straight scoop real time from what I'm thinking. And with that, let's go ahead and get started. All right, welcome back, everyone. Here is the lineup, the lineup card for the day. Make sure you have your chat window and Q&A window set up appropriately. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence before acting upon anything you hear in this program. Full disclaimer is available at OTOTnow.com. Now let's get started with our objectives for the day. Again, grow our money, protect our money, live off our money. Again, last trading day of February. And like I said earlier, all the indices are up for February. So if you had gone back to February 1st, this is why keeping things in perspective is so important. If you were on February 1st and Jeannie shows up, with the crystal ball and says, hey, everybody, the Dow, the S&P 500 and NASDAQ are all going to be up by the end of the month. Is that cool? You're going to be okay with that? Guess what? Every single one of you would have done. Yes, I am okay with that. But now that the way it plays out is we scream higher and then sell off towards the end of the month. Now, all of a sudden, it's like a crap show out there. And people are saying, we need to make these emergency moves in our portfolio. So that's why it's important to really kind of keep that in perspective. Right up for the month of February, despite the noise in the market. and in the noise in the market, what caused it? Well, that's our long-term investor topic of the day, is spiking interest rates explained. So what is going on out there? Well, the bond market, so there's two things. Remember, there's the Federal Reserve sets the short-term interest rate. That is one of their main tools to be able to control the prime the pump to the economy and maintain inflation and full employment, which are their charters. So to do that, they set a short-term interest rate, which is what the interest rate that the banks loan to each other. Well, then there's the open market, and the open market, of course, is where you get all the emotion, right? So just like in the stock market, it tends to act on an emotional basis. I was having this conversation last night with an investor that when you look at, Apple has sold off, Amazon has sold off, Tesla has sold off, all these big names have sold off in the past few days. What has changed on the, internal to the balance sheet of Apple in the past week? Nothing. Yeah, that's your answer. That's right. There's absolutely nothing has changed. So then why would the stock have sold off from 140 to 120? Well, that's because there's emotion in the market. Right? So it's all this emotion that's moving things, not anything that's going on at the actual, in the actual company. So that we don't always make our best moves when we are emotional, correct? So you need to get emotion out of it and go, hey, what's going on? What are the forces that are acting out there? Well, we do have a spike in interest rates. The 10-year is the one that we talk about on a daily basis, and we'll pull that up here in a little bit, up at 1.6% after being at 0.6 last year. So sure, it is moving up. What's that? That means if interest rates continue, just like in December 18, the market sold off 19%. In that 1 month because the Fed actually raised interest rates. Well, it's not the Fed raising interest rates here. It's the collective market. And I like to say that none of us is as dumb as all of us. Well, it is the market that's doing this to us. So that's why the interest rates are going up. Some folks think there's going to be inflation coming out of all this stimulus. Folks think that the economy is on the edge of ripping higher. I actually do agree with that, but I don't see this as an inflationary environment. It'll be just like, in my mind, coming out of 2009, 2010, where we continue to have the quantitative easing programs out there, that we did not get any inflation, but we did jumpstart the economy and ripped higher, which means the equity markets ripped higher and the bond markets were just fine. So I think we're in that same place right now. However, our topic of the day, our question of the day is how to profit from inflation. We'll talk about, and after that'll be at the end, we'll talk about what asset classes perform well under inflation. There are places to have your money. If you want to start moving some of your money there now, I get it. I'm not telling you I'm 100% right on my take on this. I don't think inflation is going to happen, but if you do, or if we need to start hedging towards that, there are some investments we can put in your portfolio right now that are positioned to do well in case it does happen. Okay. Our flow today, long, short, open, short, long. We'll do a market review, headline review. We'll do the Kramer video here in a second. Before all of that, we're going to look at Apple property, which is real estate. We're taking a look at two bond funds. We'll talk about real estate investment trusts, which again are positioned to do well in a situation like this. We'll also talk about Bitcoin. We'll execute the market open. I do have, let me put in the chat here, the longs and shorts for the day. So to cover those real quick. Wall Street Bets, the GameStop long, if you want to trade that, you certainly can. I don't have any interest in that, but you could. Other long, CCIV, that's the Lucid Motors SPAC. DraftKings crushed earnings out there and guided up. Etsy's another one. Groupon and then LivePerson all had good earnings out there for short. Virgin Galactic space is down 10%. So is DoorDash. Lost a bunch of money and projected down for DoorDash. Coming out of the pandemic, they can't continue to put up those numbers. And then the VXX. Got to look at the VXX trade. It spiked yesterday, got almost to 17. Is that over? I'm starting to think it is. So I think I'll bail on the VXX trade today. So those are the short-term stuff. So we'll get to that at the market open. Contingencies and academic resources are standard. All right, let's take a look at the Kramer video. Again, he can explain this better than I can. So here you go. Here's 3 minutes of Mad Money from last night.
Hey, I'm Kramer. Welcome to Mad Money. Welcome to Kramerica. Other people want to make friends? I'm just trying to save you some money. My job is not just to entertain, but to educate, teach, and put days like this in context because I know you care and are concerned. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. It was a tough day. I'm talking about a really tough day. I mean, the averages, they were annihilated, all right? Dow plummeting 560 points. S&P plunging 2.45%. And the NASDAQ, sell. Nosediving 3.52%. All for one reason only. Interest rates are soaring. Why? Because the bond market sees the economy getting ready to reopen. Yes, the vaccine. And it figures the last thing we need is more stimulus. To these bond investors, you know what that's like? It's like throwing gasoline on the Kingsfords. They think the economy will overheat, and what happens then? We are going to get some serious inflation.
The House of Pain.
Right now, we have a Fed chief, Jay Powell, big heart, who thinks it's nuts to worry about inflation because so many people are out of work because of the pandemic. So he doesn't want to raise rates, especially since inflation has been so low for so long. Hey, look, is he looking at lumber doubling? Like, if you want to do that, okay. Copper 417, maybe. President Biden and his allies in Congress want to pass a huge stimulus package because they want to breathe new life into the economy. As I see it, Powell and Biden are doing the right thing. I don't mind a little inflation now and then, but to bond market investors, oh, they're thinking, are you nuts? The economy's about to start booming thanks to the vaccines, and most consumers are in great shape. Everyone except the people who don't have a job. Unfortunately, there are a lot of people who don't have jobs. As a result, investors are selling bonds, pushing long-term interest rates higher, pushing your mortgage rate higher if you have an ARM. Just checked that this morning. When that happens, stock buyers pull back. They always do. And they pull back hardest on the highest growth stocks, the ones we like the most in Cramerica, but we recognize do get hit in this moment. And that's what happens. That's the high price of inflation. That's what went on today. Case in point, NVIDIA. Last night, this company reported the strongest quarter I have ever seen from NVIDIA. This company's become the dominant player in the semiconductor space like Intel was in the 90s. No one is coming close to them. And whether data center, it is gaming, it's artificial intelligence. Yet the stock got crushed because this is exactly the kind of turbocharged growth story that Wall Street turns against when rates are rising. Now, I think NVIDIA is a victim of short-term thinking. The people who dumped it here, I think, are going to be making a mistake, including the ones who are going to dump it tomorrow. They haven't thought it through.
Don't miss a second.
Okay, so there's Kramer's take on that. He can put that more eloquently than I ever could. But again, does it last today? Honestly, I don't even think the sell-off lasts into today. For those that know me well, I served in the military for a long time. And unfortunately, I learned one thing in the military about leadership, and that's why simply react when you have the time and energy to overreact. And I think that's what we're seeing. That's sarcasm if you didn't catch that. But it's true, and that's what leadership is considered now. But in the markets, that's what you will see is on days like yesterday, you will see such an overreaction to things. And when you think computers, high-frequency trading, you can't really beat the reaction, right? But you can take advantage of the overreaction. And again, that's, in my mind, is what we are seeing today. Let's go ahead and put things in perspective with the ThinkPipes platform going. This is the S&P 500 nine-month chart that you're looking at, and even the channel, despite this big red candlestick from yesterday, still in an uptrend. I mean, that's what we're seeing. So when you back up to, here is February 1st, and where were we in February 1st? Yeah, we were right here. So you're up in February. So take a breath, zoom out a little bit, and think about where you were, I don't know, around the election. And you thought, depending on whether your person won or not, you might have thought the world was ending. And yet we continue marching higher. So disassociate the news cycle, disassociate the emotion of wherever you get your politics from what's going on with the economy. The economy is poised to go higher, right? And to get stronger because of the vaccines that are rolling out, as well as the stimulus that we're seeing, and then the infrastructure bill that is rolling out after that. So really still in an uptrend, still positioned. Now that would break, obviously, if we have another 3.3% down day in the NASDAQ today, then it would break down. But I just don't see that happening. All right, when you zoom in a little bit, you can even look at, this is the S&P 500, where we are right now, or even at the lows yesterday. We're not even as low as we were on Tuesday of this week, not Tuesday 7 years ago, Tuesday of this week, right? So yes, drama, emotion, zoom out. It is not, we're not even down from where we were 2 days ago. Okay. So breathe a little bit on the portfolio and you're going to be fine. Again, I think the the move is higher here as we open up today. All right, there we have our day trading stuff set up, which we'll get to in a minute. All right, let's take a look at the around the world real quick. What's going on in the markets? Again, here's our futures. The Dow's down, NASDAQ was up almost 1% earlier. So I think we're going to see money flowing back in. Europe down across the board, Asia down across the board. Big. I think that was a hangover from the U.S. I don't think that's really on their own there. Numbers aren't in there for yesterday. The bond 10 years taking a little bit of a breather after spiking up to again 1.6. Oil up above 60. Gold and silver selling off a little bit, and then of course Bitcoin that we look at now down to 46%. So it was a oh my gosh, the world was ending day yesterday, and everything is in the red. When you look at the headlines today, stimulus is going to be the thing of the day. I think a lot of people are happy that the $15 minimum wage has been separated from the stimulus bill, and it appears Biden is all about like, yep, I accept that small loss of the battle to win the overall war. Let's get the thing passed. So I do think it gets passed today. All right. That is it for the headlines we really need to look at. When you look at Apple stock and where it is, again, what's changed in Apple in the past 30 days? Nothing, right? So it's become cheaper. So again, if you like to pay less for stocks than more, then you like a move down like this, even though your portfolio obviously overall value is in the red here. Again, if you're maxed out on Apple, like many of you are, I know I am, can't buy more here. But if you don't have Apple, load up on some Apple here, right? I'm not promising you won't continue down a little bit, but it's not going to go down. It's not going to break this low, in my opinion, of 100 and some. So I mean, it's down here. You'll look back on this and go, man, that was a buying opportunity. So again, just my opinion. Do your own due diligence. When we look at some of the other names that are out there. Over here with Schwab, Apple in the upper left, you can see, yeah, it's moving down. Here's your big dip in March. It's gone, screamed higher since then. PPTY, again, if you want to move into real estate without actually going out and buying property, PPTY is a good way to do it. If inflation happens, again, real estate goes right with it, right? So it inflates right with it. So that's one of the places you want to be. Both the bond funds I use have been problematic. I got that. FIXD and FTLB have both sold off a little bit recently. I think this is artificial in FIXD, meaning I think it bounces. I would not bail on these right now. Again, this pays a monthly dividend. You may have that reinvested, maybe not, but you're picking up shares for cheaper. So don't sweat the move down in FIXD. If you want to think longer term, real estate investment trusts are another way to play inflation. So you've got realty income down here, and then Bitcoin. Again, Bitcoin's largely all over the map, but a lot of CFOs are picking it up for their portfolios. So do consider getting into Bitcoin below 50,000 here, or 50 in GBTC. All right, let's move over and get ready for the market open. We are almost here, so give me a second to get set up. Okay, 10 seconds to the market open here. You have 4 screens in front of you. You can see on the left side is the S&P 500. It is going higher. And then you have 3 longs. CCIV is the Lucid Motors SPAC. So again, EV play, there's the opening bell. Looking at that long, it's already up 12%. DraftKings crushed earnings, again up 4%, but it was up higher even earlier. And then Etsy, that's a good stay-at-home name, start your own business sort of name. So again, it released earnings and went higher as well. So we'll keep an eye on these. I'm not in love with any of these long, but I do want to have them up to see how they react here initially. Overall with the market, see that the S&P is up 0.5%. Looking at another screen, you've got the NASDAQ almost up 1%, and the Dow hanging out about even, just ever so slightly in the red. All right, none of these are moving significantly. I'd say, well, it looks like DraftKings is starting there. But let's get rid of DraftKings and look at some other ones. Groupon is a long. Pretty thinly traded there in Groupon, but they're up 4%. Certainly don't like that entry point for a day trade. And then live person, again, tech firm up 12% here. Opened up all the way here at 65, down $1.50. You do see the market striping down here. I think that's short-lived, but we shall see. Right, 2 minutes in, and a little bit movement to the downside. All right, Etsy's doing fine, and CCIV is not really moving. I would say of my favorite here, if you zoom out on CCIV and follow some of the history here. So it was up at 64, right? And there was all that speculation of it was going to be the SPAC, the Special Purpose Acquisitions Corporation, that is going to bring Lucid Motors public. Boom, it happened. Basically got cut in half for that move of when it was announced. And then from there, it's down here and it's kind of bouncing. So it's continued, it bounced and then continued to sell off. Is the bottom in? Lucid, I can't remember exactly, but they're somebody in the squadron mentioned they had been there, out at a factory recently. It looks beautiful. I had another client say they've read a bunch of Lucid Motors information, and and it looks like they're going to have amazing cars. Well, that's what a car maker would say, right? I mean, it remains to be seen. But can they compete with Tesla? That's really the bigger question. If you want to pick some up here, I would have no problem with that. But I wouldn't expect to just print money, right? I mean, I think the jury is out. We won't know, and we won't know for a long time. So when you buy something like that, it could be like Workhorse, where we had to sit on it forever to kind of see if they got that postal service contract. Well, here with Lucid Motors, you just aren't going to know for a long time. All right, let's take a look at some other names out there that were on our list this morning. Some of the shorts, Dash, which is DoorDash. Sold, it was down at 10% earlier. You can see the earnings information. Yep, they're losing money, but remember, it's in the green because that means they're losing less. So again, that's like Airbnb last night, lost what, $3.9 billion last quarter, and everybody's like, yay, good job. Okay, not my type of investment. But a lot of people think Airbnb is the wave of the future. Could be right. Doesn't get my dollars, but could be right. Okay, so you see DoorDash kind of screaming back up. Space, I didn't see the headline on what caused, but it was down 14%, now down 12% for Virgin Galactic. And then the VXX, what's going on in the VXX today? Remember, it was a buy below 16. It's still above 16. Kind of watching the market this morning, and may have to exit that trade. Have not made my decision yet. But when you zoom out on the VXX, it did go all the way down to 14, 14.4 or so. Did add some in here. I said, buying it's below 16, add below 15. We did that. So we're up in the trade. It's whether or not to exit it now and go back long in something else. I'll make that decision here in the next hour or so, as soon as we're off air. Okay. Let's take a look at some other names here again in the upper left hand, looking at Clickstream. Revive Therapeutics is up. Moderna's up. There's your DraftKings up 5%. I like that name. Apple, and these are options here that you're looking at. They're up nicely. Nvidia's up again. Kramer talked about them, and they just had a nice earnings release. All right, some other tech names. Tesla's up. It's been selling off pretty hard. Twitter's up again. I don't invest in Twitter, but Twitter's been on fire lately. GoDaddy, I like GoDaddy as an investment. It's been selling off, so not a bad entry point on GoDaddy either. All right, Empower Therapeutics, obviously down 20% today. Very speculative in nature. That's not uncommon for it to move like that. Nikola, a bunch of lawsuits. If you remember, Trevor Milton, I believe is the CEO, and the CEO's name. Bunch of lawsuits against Trevor Milton came out for some false and misleading statements he made while he was CEO of the company. So Bitcoin selling off a little bit, 2%, not really worried about that. And there's our volatility trade. All right, going back long here. So lots of names in the green. I do think today ends up in the green. Right now, NASDAQ still up 1%, S&P 500 is up 0.3%, and Dow's down 0.3%. So we shall see. Kind of mixed across the board there. But I think the NASDAQ recovers, which is where most of the pain has been. All right, let's switch off of the charts and close with our question of the day. Is how to profit from inflation. Okay, first of all, if you own your home, you profit from inflation, right? So if you know where you live, if you are an owner, then that's what you will see, right? If inflation goes into more of an 80s style, 5, 6, 7, 8%, 10%, 18%, or whatever the crazy numbers were from the 80s, again, your primary residence, as long as you own it, or really any property you have, is going to inflate along with it. Okay, so you're not losing money in your real property, if you will. So again, where do you lose purchasing power? Money sitting in the bank is completely dead money. In an inflationary environment, you need to get it out into assets. Again, real estate is the one that it talks about first as probably your best place for it. Again, for market-based money. So say you have money in a Roth IRA, 7-figure Roth IRA, good place to be, right? Well, you can buy PPTY or real estate investment trust. So there's ways, if you don't know how, you study up and learn how to do it. But if you don't, if you know how, it's very easy. You buy real property within your IRAs and it moves, up with inflation. Okay. These things don't perform that well when the market's screaming higher. So you kind of still have to be right on, well, if inflation, if you think it's a thing, that's where you need to go. If it's not a thing, then you can either have 10% of your portfolio in this stuff, or it's going to be an anchor on your portfolio if Apple and Amazon and Google all scream higher, which they tend to always come back into favor. So you got real estate. Commodities are another one. Gold is really the primary, if you will, but the one that's more attractive right now, in my opinion, is Bitcoin. You may not understand it, you may not like it, you may not care for it, you may think it ends poorly. I would say the jury's kind of out on how it all ends, but certainly in the short term, it's being snatched up as an inflation hedge. And companies are putting it on their books. So you kind of have to get in here. I think anytime, anywhere below 50,000 is a good buying opportunity. That's my opinion. Do your own due diligence. If you use GBTC, just use the $50 price as kind of below that. You can add. Above that, I would just let it go. Okay, we started in at 31,000. So if you started with me, you're already up. So you don't have to kind of sweat the daily moves there. Bonds. Bonds, again, if you're holding individual bonds, that's your contract. You don't have to worry about that. In a bond ladder, though, if you're in retirement and you're in your bond ladder, now when bonds have been maturing, we've been at a problem, right? Because interest rates are so low. So it's really tough to add to the ladder with interest rates that low. Well, with interest rates going higher, you can actually increase your bond, continue building your bond ladder, right? So right now we've been going into FIXD, a bond fund, and bond funds do leak some money during a rising interest rate environment, where individual bonds tend to hold their value because you're holding it to maturity. So generally you want to stay clear of bonds in a rising rate environment, but if you're in a bond ladder, you're okay with individual bonds, that is. Stocks, reasonable chance of keeping pace with inflation. Yeah, it does. The growth companies will pass inflation right on to their, Walmart doesn't care about inflation. They're going to change the price of milk to match whatever inflation is. They're going to buy it for X. They're going to add a few pennies and sell it for that. That will go on. So the companies out there providing, products and services in the world aren't going to be adversely affected by inflation. It's you, the consumer, especially if you make a fixed wage, say 80,000 a year. Obviously, you can't buy as much stuff if everything gets more expensive. But it's all from the company's perspective, which stock ownership, which is owner of the business perspective, that's pass through, right? Pass it on through to the consumer and let the consumer deal with it. People will still buy, $1,000 smartphones. There's going to be plenty of demand for them, even if things inflate. I would not touch any CLOs or debt out there, and stay clear. So really switch into PPTY or real estate investment trust is your move. You can pick up some gold and Bitcoin if that's your type of investing. I think Bitcoin's more attractive now, but really stay clear, or bonds, or not add more unless you're in a bond ladder. And then stocks are a good place to be during the inflation. Look at the 80s. So, all right, that's all I have for you today. Thank you so much for checking in this morning. Hopefully that answered not only some of your questions and explained why the market's reacting and why it is, but to be able to kind of peel back why I think it's going to be short-lived, and this is more of an emotional event than it is, a game changer for the market. So thanks for stopping by. Talk to you on Monday.